Okay, imagine this. You wake up one day, and the entire plan, the big corporate strategy for automation you've rolled out, it's just wrong, fundamentally flawed.
Not a great feeling for anyone involved, I'd imagine.
Definitely not.
Yeah.
And that's pretty much what happened at the Commonwealth Bank of Australia, CBA. We're talking Australia's largest bank.
Right.
They announced they were cutting 45 customer service jobs. Why? Because a shiny new AI chatbot was apparently handling the workload.
Ah, the classic AI taking jobs headline. We hear that narrative a lot.
Exactly. But here's the twist, the real drama. Just weeks later, the bank pulls a complete U-turn. They reverse the decision, publicly admitting their numbers were wrong, they'd made a mistake.
Wow, a public reversal like that from a major bank. That's unusual.
It really is. And that specific, very public corporate backtrack, it all played out between July and August 2025. That's the core of our deep dive today.
Yeah.
So our mission here is to use the sources covering this whole mess to really dissect what happens when AI deployment, job security, and crucially, corporate transparency collide. We want to give you this shortcut to understanding what went so wrong.
And it's so important because this CBA case, it's much more than just some isolated labor issue. Honestly, it's something every manager, every employee, frankly, anyone interested in how tech is changing work needs to understand.
Why specifically?
Because it's a perfect, almost textbook cautionary tale. It shows this huge gap, right, between the sleek promises of AI hype and the often messy, complicated reality of putting these automated systems into practice, especially where people's jobs and the core business operations are on the line. It forces us really to ask some fundamental questions about how companies should manage these transitions, ethically, effectively.
Okay, let's unpack this. So let's start at the beginning. July 2025, CBA, massive bank, announces it. 45 customer service roles are being eliminated. Call center operations.
Right, the kind of frontline roles people often worry about with automation.
Exactly. And your first thought is probably, okay, here we go. The bots are taking over. What was the bank's official reason? Their justification?
Well, they pointed straight at the new tech they'd brought in. A new voice bot, a chatbot system, designed to handle those initial customer queries.
And they said it was working.
Oh, yeah. They claimed it was a success, said it had significantly cut down their call volumes. The specific number they threw out initially was that these systems were handling about 2,000 calls per week that humans previously would have dealt with.
2,000 a week. That sounds pretty substantial. Makes the redundancy argument seem plausible, at least on the surface.
It does. It frames it as a straightforward efficiency gain, making those 45 roles genuinely unnecessary according to their data.
And look, to be fair, they didn't just show people the door immediately, did they? The sources mentioned they offered things like reskilling, help finding other jobs within the bank.
That's right, yeah. The standard corporate playbook for managing these kinds of tech disruptions was followed. They offered support packages, redeployment options.
Though I sense a bet coming.
But the skepticism was there from day one. The finance sector union, the FSU, they immediately sounded the alarm.
What was their take?
Their argument was pretty blunt. They basically said CBA was using AI as a convenient excuse, a sort of modern fig leaf, just to cut staff on the front line and save money, not because it was part of some genuine, well-thought-out transformation of work.
So innovation theater, essentially. Cutting jobs disguised as progress.
That was the FSU's view, yes. They saw it as job destruction, plain and simple, and they made it clear they weren't going to just accept it. They were ready for a fight.
Okay, so the battle lines were drawn. But then things got really interesting. That initial confidence from the bank, backed by that seemingly solid 2,000 calls saved number.
Poof, gone.
It just evaporated. By August 2025, only a few weeks later, which is incredibly fast in corporate time, the bank performs this stunning total reversal.
And the way they admitted it was, well, remarkably frank for a large corporation. CBA put out a statement saying, and I'm paraphrasing slightly here, our initial assessment didn't adequately consider all relevant business factors, and this mistake means the roles weren't actually redundant.
Wow, just don't think about that phrase. Did not adequately consider all relevant business considerations. They're basically saying, oops, our homework was wrong on a decision affecting dozens of lives.
Exactly. They admitted the calculation, the whole basis for the cuts, was fundamentally flawed from an operational standpoint. It's a rare kind of admission.
It is stunning. But let's dig into the why. Why was the calculation so wrong? How does a bank pouring, billions into technology misread the impact of its own chatbot so badly?
Well, the sources point to the metrics themselves being the core problem. They were just off, completely wrong.
So it wasn't just that the 2,000 calls saved figure was optimistic?
It seems it wasn't just optimistic, it was incorrect. Some internal reports apparently suggested that after they implemented the AI, the actual call volumes handled by human agents rose. They didn't fall.
Wait, hold on. The workload increased. How on earth does putting in tech meant to reduce calls lead to more calls for the humans? That makes no sense.
It sounds totally counterintuitive, doesn't it? But it actually speaks volumes about the complexity of customer interactions, especially in banking.
Okay, explain that.
Well, think about it. The AI, the chatbot, it's likely programmed to handle the simple stuff, right? The repetitive, basic queries. What's my balance? How do I change my address? That kind of thing.
Sure, Tier 1 support.
Exactly. But what happens when a customer has a slightly more complex issue? Or a nuance the bot isn't programmed for, a security concern, a question about a complicated mortgage product?
The bot hits a wall, presumably.
It hits a wall, and then what?
Yeah.
It escalates the call back to a human agent. But now that customer might already be frustrated because they've wasted time with a machine that couldn't help them. Ah, okay. So the chatbot isn't actually resolving the problem for many people. It's just acting as an annoying filter for the easy questions. And the harder calls, the ones that take more time and skill.
Get punted back to the human staff, but now with an added layer of customer frustration. So the nature of the calls landing with the human agents changes.
Meaning the human agents weren't handling fewer calls. They were handling fewer easy calls, but potentially more difficult, time-consuming, and emotionally draining calls from annoyed customers.
Precisely. You shift the workload profile. Instead of a mix, the agents are suddenly dealing primarily with complex issues from people who've already had a bad automated experience. That's a recipe for disaster in terms of efficiency, agent burnout, and customer satisfaction.
And the bank's initial assessment, their 2,000 calls saved metric, it completely missed that dynamic. It failed to account for the actual human experience and the operational reality.
It seems so. A major failure in assessing the real-world impact beyond a simple, potentially misleading volume count. So the FSU, the union, they must have felt pretty vindicated. They called the reversal a massive win for the workers.
Absolutely. And on one level, it clearly was a victory against what they saw as rushed, ill-conceived automation.
Rolling out AI based on flawed data when people's livelihoods are directly impacted. Huge reputational risk, too.
Absolutely massive. It's a stark reminder of the need for caution and, frankly, humility when implementing these powerful technologies.
Okay, this story is fascinating, just as a corporate blunder. But the bigger question is, what does this single, very public failure teach other companies, other organizations planning their own AI rollouts? It seems like it exposed some serious cracks in the usual automation playbook.
I think it offers several critical lessons. The first, and perhaps most obvious, is about AI hype versus the reality of human work.
Right, the gap you mentioned earlier.
Exactly. CBA demonstrated, quite painfully, that just plugging in a bot and expecting to replace skilled people without really solid, accurate metrics that go beyond just call volume to include things like resolution quality, customer satisfaction, the complexity of the issues handled well, it's a recipe for failure.
Especially in customer service roles, where that human nuance, empathy, and complex problem-solving ability are so crucial.
Precisely. Cut that human element too soon, based on faulty assumptions, and the whole operation can start to wobble, or in this case, pretty much fall over.
That points to the second big lesson, doesn't it? About governance and transparency.
Absolutely. The fact that CBA explicitly said they lacked sufficient business consideration is a massive red flag for any executive team. And that brings us to the third key lesson, which is maybe the scariest part if you're managing change. Realizing this decision might have stuck if not for external pressure, it really highlights the ongoing importance of worker voice and labor rights.
The role of the FSU, the union.
Yes. Their quick and forceful intervention was critical in challenging the bank's flawed data and assumptions. Their core message, which resonates widely, was essentially, we want to be part of the change, involved in how technology reshapes work, not just replaced by it without proper consideration.
So this case really underscores that unions or employee representatives need to be seen as essential partners, stakeholders in any responsible AI deployment strategy.
Yeah.
A necessary check.
I'd argue yes. They provide a crucial counterbalance and can raise operational concerns that might be missed or minimized internally, especially when there's pressure to show quick cost savings from tech investments.
Okay, so hype versus reality, governance failures, the need for worker voice.
Well,
What's the fourth takeaway?
it connects to the broader future of work discussion. Look, CBA is a huge player. They're investing enormous sums, something like $82 billion in operations and technology, using automation as a key lever for efficiency. That's happening everywhere.
It's the direction of travel for most large organizations.
It is, but this episode is powerful proof that even with massive investment, the transition has to be managed with extreme care and foresight. Automation shouldn't dictate staffing levels based on shaky, unproven metrics that can unravel in weeks.
The goal should be to use tech to support and enhance the business, including the staff, not just replace people based on an algorithm's potentially flawed output.
Exactly. If you manage it poorly, if you rush it based on bad data, you don't just risk operational chaos, you risk destroying employee trust and corporate credibility overnight. And rebuilding that takes a long, long time.
So let's bring this back home. For you listening, why does a bank's blunder in Australia actually matter to your job, your team, or your organization?
Well, I think for employees everywhere, this CBA story is a very real, very concrete example that the risk of job changes, maybe even job displacement because of AI. It's not some distant future scenario. It's real, it can happen fast, and sometimes the initial decision might be based on faulty premises.
It really highlights the need for companies to have solid plans in place, doesn't it? Clear, reliable pathways for reskilling people, transitioning them to new roles if needed. Not just relying on having to say, oops, never mind, after the fact.
Absolutely. That oops moment isn't a strategy. And for policymakers, for regulators looking at the future of work, this kind of very public, very costly error by a major financial institution, it just pours fuel on the fire of ongoing debates about how we should govern AI in the workplace.
If you found this look into the CBA case, corporate transparency, and AI accountability insightful, we genuinely love to hear from you. Please share your thoughts or any questions you have down in the comment section below the video. Your perspectives on these real-world examples are really valuable to the conversation. And of course, encourage your friends and colleagues to like this video, share it, and subscribe to our YouTube channel, Everyday AI Podcast, to stay updated on all the latest AI insights and trends. Oh, and don't forget to hit that notification bell. That way, you'll be alerted as soon as we release new deep dives like this one. Thanks for joining us, and we'll see you next time.